Question was 5.2.7. We are first doing question of equalized annual NPV. There are 3 questions which are for equalized annual NPV. We will be doing 2 and we will be keeping 1 as homework. First, try to concentrate this. Many a times in some projects, like say in this project, I want to purchase a car or I want to purchase a car. Car is say I-20, this is also I-20. But this is petrol, this is diesel. Is this a capital budgeting decision? The answer is yes. Should I purchase a petrol car or should I purchase a diesel car? There is a cost of the car given. Repairs and maintenance is given. Petrol cost is given. Insurance and other cost is given. The problem is I cannot take the decision with NPV. For NPV, I need cash inflows. If I purchase the car, what will be cash inflow? Zero. There is no cash inflow if I purchase the car. I am purchasing it for my own transportation or just for leisure. I want to say that I am having a car, so I am purchasing it. Still, I want to find out I should purchase a petrol car or diesel car. There is no cash inflow. Then how do you take NPV? Because NPV is present value of cash inflow minus present value of cash outflow. Anyone who can help me out? How I will be taking a decision whether I will be purchasing a petrol car or diesel car? There are only cash outflows in both the cases. Try to concentrate. I am telling you. I will find out present value of cash outflow for I-20 and say it is 2 lakhs. It will never be 2 lakhs. Let me take it 10 lakhs. What is present value of cash outflow in petrol car? It is present value of all cash outflows. I have assumed the car will run for 10 years, all 10 years. I have decided petrol cost and everything I have adjusted. And what is the present value of cash outflow? Because there are only outflows, I can find out present value of only cash outflow. Here also, present value of cash outflow comes 12 lakhs rupees. So try to understand, including all expenditure, converting all the values today, that is present value, this car is costing me 10 lakhs and this car is costing me 12 lakhs. Now we are not in NPV, we are just in present value of cash outflow. Cash outflow lower is better. I will be selecting this option. I'm not having NPV, but I need to purchase one car. There are only cash outflow. I will be finding out present value of cash outflow, present value of cash outflow of another option. Where the present value of cash outflow is lower, I will be selecting that particular car. So if it is NPV, it is a higher figure. But if it is just present value of cash outflow, it is a lower figure and I'll be taking a decision. See, in this equalized annual NPV, till now, whatever questions are asked, always it is asked in such a manner that there are only cash outflows. There are no cash inflows. Let us solve this. APZ Limited is considering to select a machine between 2 machines A and B. 2 machines have identical capacity, do exactly the same job but designed differently. Machine A cost rupees 8 lakhs. Having the useful life of 3 years, it cost 1,30,000 per year to run. Machine B is an economy model, 6 lakhs, useful life of 2 years, 2,50,000 per year to run. The cash flows of the machine A and B are real cash flows. The costs are forecasted in rupees of constant purchasing power. Ignore taxes. Once I ignore taxes, I will be even ignoring the depreciation. The opportunity cost of capital is 10%. Present value factor are 10%. Of 10% are given. I am first doing only for machine A. Try to concentrate. Machine A at the end of 0 year I will be having a cash outflow of 8 lakhs. Having a useful life of 3 years. So first, second and third year, it cost me, again it is a cash outflow, 1,30,000, 1,30,000, 1,30,000. These are real cash flows. So they are cash flows given. I will be finding out present value at the rate of 10%. Now, if I find out present value at the rate of 10%, I will be getting present value of cash outflow only. Because there are no inflows. Everything is outflow, so I will be getting present value of cash outflow. Very simple, 1,30,000, you can do it by GT. 1 divided by 1.10 is equal to GT multiplied by 1,30,000, and then you can just add 8 lakhs rupees. I will just ignore negative sign, right? Everything is outflow. So it is 1 divided by 1.1 is equal to GT multiplied by 1,30,000 plus 8 lakhs. It is 11,23,290. 11,23,290. I am doing for machine B. Machine B in 0 year it will be negative 6 lakhs. 1, 2 and 3 years it will be 2,50,000 outflow. 2,50,000 outflow, 2,50,000. Just find out present value of cash outflow. I cannot find out NPV. I will have to find out present value of cash outflow. 6 lakhs is itself a present value. 2,50,000 I need to find out present value. It is 12,21,713. Sorry, it is my mistake. 2,50,000 is just for 2 years. It is not for 3 years. So I'll have to find out present value of cash outflow. 1 divided by 1.1 is equal to M plus MRC multiplied by 2,50,000 plus 6 lakhs. 10,33,884. Can I take the decision by present value? The answer is no. Why? One project is of 3 years. One project is of 2 years. You should never take a decision based upon present value. Sir, which decision we were going to take this? No. If it is only cash outflow, lower is better. So I am going to take decisions of machine B. But I should not take. Which decision I should be taking is equalized annual. It is by equalized annual present value of cash outflow. How to find out? This is for 3 years. The rate is 10%. We have done it in introductory session. 1 divided by 1.10 is equal to M plus is equal to M plus is equal to M plus. I told it to you by GT, right? 11,23,290 divided by MRC. See what is divided? Instead of divided by 3, I am doing divided by 2.4868, right? Which is 4,51,691. 451,691. I don't do divided it by 3. I do divided it by present value annuity factor of 3 years at 10%. This will be divided by 2. Yes or no? No. It will be divided by present value annuity factor of 2 years. 1 divided by 1.1 is equal to M plus is equal to M plus. So that factor is in my MRC. 10,33,884 divided by MRC is 595,714. If it was NPV, it will be equalized annual NPV. If it is only present value of cash outflow, it will be equalized annual present value of cash outflow. Which machine I should select? Machine B. No. This is only cash outflow. Cash outflow lower is better. Which is lower? Project A. I will be selecting project